So as you can see, as we've discussed all these principles of symmetry and balance and the open plays and the types of day types you can expect, straight away you should be starting to say to yourself, well, I'm going to need some form of a template so that I can not only identify, the early observations, but equally identify, the potential hypothesis that you can develop based on the information or the objective information being shown to you by the volume profile. So what we're going to talk about now is a little bit about the pre-open routine that a trader would take. And then what I'm going to do is, when we eventually get to our playbook, I'm going to give you a template that you can not only complete for yourself, but you can develop for yourself so that you don't miss out on any of the objective information that the market is trying to show you. So what would a typical pre-open routine of a trader look like? Well, first of all, trade location. Where are we trading? Now, in the next slide, we are going to talk a little bit more about trade location, but merely trade location is where we are trading relative to sort of, past trade. You then want to think about the overnight dynamics. In other words, what have your key markets like? If you're trading the European session, what has the Japanese yen done, or what has the gold bullion done, or what have the U.S. bond markets done, the Asian bourses done, and the dollar? You need to understand, have these markets shown any kind of initiative, or have they been moving sideways? If they are showing aggressive intent or volatility, all right, that is going to spill over into the markets you trade, the next session. We'll then determine our opening call. So once we've sort of understood, where we're trading and what the overnight dynamics are, we'll then determine where the market should open based on where it closed the previous day and the relative overnight moves. Again, we need to interpret, where it's opening relative to where it should open, as this will throw up potential early opportunities. Then we need to have a look at, once the market opens, how much conviction is there by watching the open play. So remember, we spoke about the 4 open plays, being the open drive, the open test drive, the open rejection reversal, and the auction open. Now, depending on which open it is, we can develop a level of conviction as well as the level of, or hypothesis for what may occur as the day progresses. Then, where does the open play occur? Is it in value? Is it in and out of range? And all these sorts of questions again are going to be feeding us objective information about what the market may potentially do. Now note, within the first hour of trade, you should develop a hypothesis based on the conviction being shown at the, by the market at that point. Remember, conviction is not your conviction; it's the conviction or the factual conviction that the market is showing us. Now remember, if we see a market opening imbalance with a very basic open auction, there's a low level of conviction. However, if we see the market open out of balance with an open drive, there's a high level of conviction. The 2 hypotheses we'll formulate on these 2 opens will be greatly different. And then note, where will other market participants be drawn in? So important to have those, remember those key pivot points or trigger points where, one, we may see initiative, or where we may see, further responsive type pattern behavior. So it's crucial that, whilst the day develops, we do recognize those potential areas for further initiative and volatility and volume, as well as maybe a lack of volume and volatility and responsive trade. And then, what are our statistics? This is so crucial. What's the average range of the day, of the hour, of the month? What's the average volume that's going through? What's the average rotation of that the buyers and sellers are currently doing? All these sorts of statistics will add so much value to your understanding and interpretation, not just of where markets are, but where they could potentially go in the future. Let's now have a look a little bit more closely at what we mean by trade location.